can have it. You think it was SMF MMTs. This is the monthly S&P 500, and on this, we started with a 1, 2, 3, 4, 5 month buy signal. That's called a bull trend buy signal, which was real good over here because you can see on the way down what a monthly MACD, that's what these are. And that's why they go down and you make money selling short. When everyone is holding long, you're short. What I am doing is I'm saying in the short term that on a monthly level, I'm 92.98%. I've got 75% of the S&P 500 companies reporting this week, 4/25 of 2011. As we go through the bigger part and the bigger bulk part of this earnings, we're going to have a problem with the S&P. Not because the S&P is in a bear market. No one said that. The bulls have got a lot to worry about because the upside is limited here in the short term on the S&P. There will be a bear reversal trend that comes back down, and we will have another correction around the corner on the S&P, 8 to 12%, like the Dow will have. Because when we get to such extreme levels, it's time to be selling into strength. It's time to be taking those gains off the table. Ben Bernanke is going to have an FOMC meeting this week as well. When they pull out the QE2 stimuluses, and the dollar has been being sold short. Everyone is short the dollar. When that dollar trade starts to go back up, the equity side of the overbought equity market will reverse. We'll be looking at shorting very high commodity prices that have had 35, 50% or higher moves. When they trashed the dollar, that sent our oil prices higher. That's part of it. The other part of it is all of our commodities and the edibles and other commodities went screaming higher as well because of it. Well, I can tell you right now that they're going to have to remove the stimuluses here. And every time an FOMC governor, that's called the Federal Open Market Committee, there's nothing wrong with adding stimuluses when we were down here at the bottom of the S&P when we were in a recession. The problem is that cheap money has gotten into the system to such a degree that there's a potential. We're just creating another bubble, not us. We're going to take it when it goes up. We bought this down here, and we've been buying this all along. In the short term, just like I said in February on the Stock Market Funding homepage, we had a correction in the S&P, about 100 points. The next correction is we're going to have to work again. We're going to have to get all of this overbought capacity level out. We're 92.93% on a monthly. When you look at the S&P 500 here on a weekly, we had this correction that we called in the first quarter of 2011, January, February, March, and there's that April, there's that 4-week pullback. It's right there. Every live trade that we did selling short that 4 weeks is right there. Then I said the party was over. The SMF platform said time to get long, and we've been long. We got the bulk of the earnings are going to be out of the way. We've got a very cheap dollar that probably isn't going to go too much cheaper, but when they buy the cover and that dollar goes up, that means that cheap dollar has also fueled profit margins on the way up, because they have. And these instruments that have been manipulated, they have their mechanical processes. The public can never know. What we are telling our SMF traders, market makers, that's what they are, is that there's going to be a correction around the corner in the S&P. Because, yes, we're only 84.84% DS overbought on the weekly. We still have some room to put in an exasperated high. However, we do know that the upside is very limited, and that if we do break higher to a blow-off top, we would be looking at the S&P top, that it would have to clear this 1348, the 1350 up to the 1375 would be an all-time overbought situation, and then a reversal will come. I will tell you, bear market reversal is around the corner as the earning wind down of the S&P 500. No one says those earnings are going to be bad, but somewhere along the line, there are some mechanical things that have to happen with the Fed. And another thing is that overnight money at 2.5% needs to get above 2% level, 3%. growth contraction due to high commodities and oil. We've been saying it since last year that it was coming. We are fully in it now. Even wheat jumps to a 2-month high. Corn spikes. Everything that we eat, you can thank Ben Bernanke for that cheap money in the system. You can thank him for trashing the dollar too, and everyone else in government that's involved with it. Because this is not the right thing to do. It was the right thing to do in the financial crisis in the beginning to give the economy some support. The problem is, folks, they never know when to pull out the stimuluses. They never do. They overshoot it. Okay? Everybody says inflation isn't a problem right now. Maybe it's not nearly the problem that they keep preaching to you. Don't believe it. I'm paying more at the gas pump. I'm paying more for food. I'm paying more for energy. If that's not inflation, folks, and you can't figure that out, too bad for you. Because you're paying more out of your wallet every month. That's inflation. That means that eventually the restaurant stocks, they're all overbought. Retail holders, all overbought. The full market in this particular wonderful bull cycle rally, which is good. We've had the great bull rally to this overbought area, just like we did when we called the 4-week reversal right there. You see those red weekly bars? Yeah, that's what we're talking about, all right. There's a time to sell into a bull move, then buy a bull move and sell into a bull move. There's a time to take the bear move when the bear is there. There's all kinds of things to do with these markets. Corn, the July contract at 768.20, up 24 handles today. This is absurd, people. This is absurd. The only time that I know that we get so unbalanced is when a major move is coming, whether it's a bull move, which we've had, and a bear move, which is around the corner. And we don't miss bull top reversals. I'm sorry. We've got too good of a track record right there on stockmarketfunding.com. Go look at all the indexes every time we call them. If you own equity, sell into it. Technology area is done well. There's going to be some sensitive areas when things start to change, and the U.S. economy is going to have to learn how to stand on its own 2 feet and start removing all of the stimuluses that end up causing big bubbles like they caused in year 2000, like they caused there in 2008, like they caused in the early 90s, like they caused to a capitulation in 87. It doesn't matter. It's the same outcome every single time. That means that the forward-looking earnings cycle over the next remaining quarters are going to change a little bit. They're not going to be bear earnings, but then again, they're not going to be top of the bull earnings cycle either. So we're going to have to find an equilibrium of earnings moving forward, because if gasoline goes to $6 a gallon, I'm sorry, your bull is going to get buried for a while. So the bull run was nice while the bull run was here. And just like it happened in the 1930s that we have talked so much about on Stock Market Funding or in our blogs, we go back to bear and bull corrections. We always know that it always ends in a bad way. It's always good, but it ends in a bad way because these policymakers using financial instruments, it's hurting us. It's not helping us. If it was helping us, then we wouldn't be at the pump like we are. Don't blame the Middle East that it's the blame all the time. That's just a fall guy. So, the next trading days, as we wind up with the earnings season, you'll have a bear market correction around the corner. That's all I've got to say. We will be making money selling short. We've got the 10-week moving average kind of tilting here. And this is all standard stuff, but as a market maker, MMTs, you'll continue to do the same thing. This is what is going on. Bear reversal around the corner, stockmarketfunding.com.